has just spiked, breaking through the $4,200 mark again. But what's behind this sudden surge? Are we looking at the start of a new all-time high, or is this a bull trap? Drop your thoughts in the comments and let's dive in. A quick look at the daily chart shows just how fast and furious this move has been. It kicked off last Wednesday, and by Friday, gold had already exploded, surging nearly 3% and completely breaking out of the consolidation we've seen since the end of October. The momentum has carried into this week, and right now, the market's focus is crystal clear. Can gold hold above 4,200? If it does manage to somehow stabilize above 4,200, the uptrend that started in August could become the next resistance level. And if we see a pullback, the previous breakout points at 4,100 and 4,050 could now act as key support. Well, beyond the usual long-term drivers like central bank buying and falling real yields, two new stories are dominating the conversation at the moment. First, there's the AI bubble safe haven effect. Well, some traders think AI stocks are overvalued, and with some big tech companies rapidly ramping up debt, concerns about their financial health are growing. That's pushing money into gold. The classic safe haven logic is pretty straightforward, I would say. Second, and the one grabbing the most attention as well, is Fed rate cut expectations. Traders are betting that with the government shutdown any soon, the upcoming economic data could pave the way for a December Fed rate cut, which would be bullish for gold. Well, actually, we can still view it through a risk-off lens. Recent private sector data show a cooling labor market and weaker consumer confidence. Considering that official data might be distorted, I think traders buying gold are mostly hedging against economic uncertainty. So putting it all together, risk-off sentiment in a data vacuum and worries about an AI bubble are both driving gold higher. The big question now, can this rally continue? Well, personally speaking, I think the path of least resistance in the short term is still upward for sure, but hitting a new record quickly won't be that easy. Official data releases will remain a key focus for the market. In the best case scenario, if the Fed sees 3 consecutive employment reports for September, October, and November showing unemployment steady around 4.3%, and October CPI confirms inflation remains under control, then greater policy visibility could dampen gold's safe haven appeal. But achieving this ideal scenario won't be simple. That said, unless the non-farm payroll suddenly show a sharp deterioration in the labor market, forcing the Fed into an emergency rate cut, or what we called Fed put, I personally think gold is more likely to keep trending up moderately. So, how do you think this rally can go? Are you jumping in or staying cautious? Let's chat in the comments.